Welcome, everyone. My name is Felipe Ultramari. I'm the planning director with Genesee County. We're here to listen to the final presentation for the report for the housing needs assessment and market analysis for Genesee County. With me here, we have Chris Lankenow and Isaac Kwan, who are both part of the Urban Partners team who put together this report, and they will be putting out a presentation for you. This meeting is being recorded, and the recording will be posted on our website for later viewing. Those of you that contacted me and filled out the registration form and asked for a certificate will be receiving a certificate via email that you attended the presentation. If for some reason you forgot to check that box, just email me quickly, and I will send you a certificate so that you can get your credits for your planning board and zoning board of appeals land use credits. With that, if you have any questions, Chris, how do you want to handle questions? Do you want to wait till the end?
It's okay. I think during the presentation, that's fine.
Okay.
Or if people want to hold them, we'll have a Q&A at the end as well. But if
okay,
if it's a quick interjection, that's fine.
Yeah, if you have a quick question that can be answered, feel free to raise your hand, or put it in this chat.
That's a good idea.
And then we'll address those at the end, or if it's a quick question, maybe we can take care of it right away. So looks like the presentation is up, and I think Chris, I think go ahead and take it away.
Okay, thanks Felipe. Once again, I'm Chris Lankenow with Urban Partners, and with me is Isaac Kwan from Urban Partners. We're both principals with the firm, and we were happy to work with the county over the last year on this project. It's been really interesting for us. I can't thank the staff enough that we've worked with, Felipe and Jimmy and Tammy and Pam and Jim at the Genesee County Economic Development Center. All been a great sounding board for us. So we appreciate your local perspective and keeping things on track with us. So it's been a great partnership. Let me got the presentation here. If some of you here today joined us back in May, at that point we presented what we called an interim presentation, and that was a review of our findings up till that point. What I'm going to do is do a quick recap of some of those today for those who were not able to attend, to provide some context. But the new material today will really be the needs, the housing needs by 2040 is the year we're projecting, and then the recommendations. So I think that'll create some discussion. But let me start with giving you a quick updated schedule or schedule here, just to give you a sense of what we've been doing and when. So we first kicked this meeting off in December, about 10 months ago. And then throughout the winter, we did the public engagement process where we talked to a series of stakeholders. We had a countywide survey. So through both, we got all kinds of great information. And then we kind of dove into the real meat and potatoes of the housing market, the rental market, the sales market. We got all kinds of prices and pace of sales and rents and all that, and we'll cover some of that today for you. We then launched into the needs, basically based on all that information. What will the county need in the next 25, 30 years? And then here we are at that circle, phase 5. We're at the end now, September, going through the recommendations and covering the final report with you all. So let's jump in here. So this is kind of the order of the report, just to follow it logically, I suppose. We first looked at demographic trends, mostly relying on the census, which for those who use the census know there's some limitations to it. That's why we used other sources to look at the housing market, which we'll get into. But in a nutshell, the county had some mixed trends. Overall, over the last 10 years, a slight decline, but some of the municipalities have grown, others have not. But overall, and you'll see seniors in the county are an expanding cohort, which has its many housing implications. What we did was we divided the county into 4 submarkets to kind of make it more manageable, understanding that there's very different characteristics throughout the county. You've got the city of Batavia right in the middle, which is the densest part of the city. I'm sorry, of the county. You've got the town surrounding Batavia, which is probably the most suburban part of the county. And then what we call the east and the west, breaking those towns and villages up into those geographies. And you can see the breakdown of the most recent available population available 2022. The bulk of the population is in the west side, closer to the Buffalo market. Whereas Batavia, however, takes up a big chunk of the population. So pretty impressive that small geography, it's your center of the whole market there is Batavia. So not surprising that that's a pretty large portion. Looking at change, comparing it to both Rochester and Buffalo metro areas on each side of you, both of those grew by 2 to 3%, while the county has declined by 3%. But again, there has been some fluctuation of growth throughout the county. So Batavia, among those submarkets, grew. And the town actually lost population, whereas the east and west submarkets declined not as much, but a little bit anyway. This next slide gives you just a sense of where growth has occurred. So despite some of those aggregate losses, if you will, several towns include and Batavia grew over the last 10 years to kind of offset some of those losses. So there are portions, mostly in the west, that are growing, and hopefully we'll continue to see that occurring. The age is a really interesting thing to look at. So again, looking at trends over the past 10 years of the most recent available data, you can see of the age cohorts, how those have changed. So the very young population has declined. However, the post-college graduate young professional population has slightly increased. And then you get into the middle age, that couple of cohorts has declined. And then the really apparent growth, as you can see, are the seniors or the 55 plus that have grown significantly. And that is anticipated to continue. And again, seniors have a very unique and important impact on future housing needs. So that's going to be a critical point. Incomes, again, we compare the county to the 2 metro areas bookending it, actually higher than Buffalo metro area as a whole, but not quite as high as Rochester. So, somewhere in between in terms of income, which is good to know. Okay, affordability is an important aspect as well. We heard a lot of that from stakeholders. Most places we work, affordability is definitely an issue. There are a lot of causes for it, whether it's home prices, whether it's incomes, availability of jobs. A lot of that factors in, and you're no different. There are challenges there, of course, but what we find is the lowest income households are the ones that are most impacted by housing affordability. Not surprising. This graphic just gives you a quick snapshot of the burden. Cost burden is considered if you're spending more than 30% of your household income on housing. And as you can see, more than 5,000 county households, or 22%, are indeed spending too much or more than 30% of their household income on housing. And that starts chipping into, the household budget that is spent on other things like medical needs and food, simply, and transportation. So that is an issue. You can see renters are more impacted by that than homeowners. Homeowners tend to have more built up wealth just from owning the home. So a higher percent of renters in the county are affected. When you look at how that compares to Erie and Monroe counties, you're kind of in the middle. Your homeowners are less affected by cost burden than Monroe County, more than Erie, and then the renters are actually less impacted than Monroe. and Erie counties. So it just gives you some perspective that you're somewhere in the middle, but you're feeling the effects of affordability as well. Looking at employment, because that's very important, its connection to housing. Job growth has fluctuated in a nutshell, and residents are commuting further. So let's get into that a little more. So you can see the fluctuation here. We went back to 2005 to give you a good, 25-year, almost 20-year period of job growth here. And it's pretty much gone up and down throughout the years. You could probably attribute the 2011 decline from 2009 to the Great Recession, which is we're seeing everywhere. Communities lost jobs. Then there was another spike where it kind of evened out in the mid 20-teens about 5 years ago. And then the economy started surging again as we approached the end of last decade. Then, of course, COVID hit, and everywhere we've worked, we've seen a drop from 2019 in jobs. That information came from the U.S. Census, but the Bureau of Labor Statistics, thanks, is another source that has a more recent year of 2023, indicating more than 23,000 jobs are in the county. So if that's the case, we're seeing another rise, which is good. And just to point out the industries in the county over that period that have seen job changes, the most notable change is manufacturing is the highest, where you've added 361 jobs. Healthcare and social assistance has added 331 jobs. However, educational services has seen the most drop in jobs, over 500. So that's the trends of that period there from 2005 to 2021. Looking at a snapshot of the most recent picture of your job market, this shows you the percentage of the different industries in the county of employment. Manufacturing is the highest, more than 15% of workers in the county are in manufacturing. Second highest is healthcare and social assistance at almost 14%. And you can see as the chart goes to the right, those are the smaller industries, but overall they amount to more than 22,000 jobs, which was that 2022 figure that we have there. Kind of looking at the commuting patterns and where people live. So when you look at people who work in Genesee County, this is where they live. 48% of them live in the county also. So they're working and living in the county. And then you can see over on the left where some of these other folks are coming from, mostly Monroe and Erie counties. One interesting fact is, so 2021 is the most recent information available. When you track it back to 2005, you can see more people lived outside of the county. So it's those numbers are changing as time goes on. When we look at where the residents work, so these are people who live in Genesee County, where they work, a similar number of or types of counties there. You'll see a lot of the same ones. However, the folks who live in Genesee County but also work are 40%. So that is down from 46% in 2005. So again, fewer people are working and living in the county, and there's more commuting going on, both in and out of residents and workers. I'm going to hand it over to Isaac. He's going to go through some of the supply and the sales market. He's going to hand it back to me, and then I will continue. I just wanted to make one note. The report will be available for everybody, and it goes into much more detail than we're showing. This is a snapshot to try to, cover some of the key points. So if you feel like there's information missing or wondering where things are coming from, it's hopefully there for you in the report, but I just wanted to point that out, that this is highlighting some of the key points. So.
All right, so in this section, we'll cover the supply of housing currently in existence in the county. So the key takeaway that we've observed in this section is the housing stock in the county is typically older, single family detached homes with ownership and vacancies that fluctuate by different locations. So we'll go into the sub-market analysis for the home ownership rate as well as the supply as well. As you see here, overall, the county has a home ownership rate in 2022 of 73%. And the lowest home ownership rate is observed in the city of Batavia at 53%. And the other three submarkets are pretty high. Batavia town of 88% is tremendously high. A little bit below that is East submarket, and West is at 80%. So other than the city, this is a predominantly homeownership county. Next slide. This is a little bit different. So we're looking at occupied as well as vacant homes and kind of trying to get an analysis of what's going on in each of the housing units. So there's a total of 26,000 housing units. Of that, just under 18,000 or 69% of that is owner occupied. A little less than 6,500 or 25% are renter occupied. And the three smaller boxes are vacant homes, and there are different categories of vacancies. So one is in the middle, a conventional vacant, lack of a better term, we're calling that. And that's simply homes that are either being built or are for sale or for rent. So these are ones that are in transition. So it'll quickly be occupied in the near future. The gray box, however, other vacant, that's at 3% of almost 800 units. Those are properties that are too far dilapidated or in legal entanglements. So they are effectively not part of the housing supply. It's not occupiable. So that number is at 3% or 784. Back to the purple is at 2%, the for sale for rent homes at 530. And then seasonal vacants, these are, second homes or short-term rentals that are categorized in that way. That's just over 300 or 1%. Next slide shows a breakdown of that analysis by submarket. As you can see, in the city of Batavia, you're almost 1-to-1 in terms of homeowner occupied and renter occupied. So that is the biggest takeaway. And in terms of, Batavia town, these are percentages. So it kind of mirrors what we were talking about. There's not a tremendous variance in terms of different statistics in terms of other vacants, other than to note that in the East submarket is proportionally higher at 368 units that are other occupied. These are dilapidated housing, as well as the city of Batavia that has 339 other vacancies. So that's something that we were paying attention to. Where are these homes that are dilapidated and need attention and need intervention? So next slide, we will talk about the change in the types of housing supply. Everything increased. On the left is owner-occupied homes. It increased by 303. Seasonal went up a little bit. Renter went up, though not as much at the same pace as home ownership. So renter was added by 151 units in the 10-year period. It should be noted that the other vacancies also increased here, even while conventional vacancy was the only typology that was shrinking. It went down by 200 units. So that really paints a picture of two things. One, your older housing stock is becoming some of them are becoming more dilapidated, not in circulation, if you will, not contributing to the housing supply. So that's something that we need to keep an eye on. But also the conventional vacancies, the ones that are for sale for rent, have been shrinking, which signals a tightening market. So those are the two key takeaways that we have from the housing supply, and just anecdotes and interviews and just data that we've gathered says it's really difficult for renters to find somewhere to live. Certainly that's the case for homeownership as well, but renters, we heard that there's really nothing to rent, no listings, it's by word of mouth, et cetera, and the data seems to point to that as well. Next slide, we will show the permitting aspects. So this is single family units permitted in the entire county. As you can see, the peak period was 2003. From 2000 to 2004, let's call it, like you were averaging about 100 units permitted per year. And then began a decline, a deceleration of that pace. Usually 2007, 2008 marks a precipitous drop in most communities, but in Genesee County, you were experiencing a slide well before that in 2004, and it's sort of remained there. In 2011, you were as few as 19 units permitted of single family, and it's been fluctuating up and down, but no more than 49 units permitted in 2019. And then the last year that this record was available, you were permitting 26 units of single family units permitted. Just to give you a preview, that's nowhere near enough housing that you need to build to keep up with projections. So that's something that we need to raise a flag about. The next slide is single multifamily units permitted. And again, this is highly fluctuating based on what apartment complexes are being permitted for that particular year. There's no discernible pattern per se, except that there are years that have very few, a duplex here or triplex there, and then the spike we're associating with larger apartment complexes that are kind of occasionally coming online. But other than that, it's not a consistent rate of production. It's just based on a few projects that are being permitted based on their schedules. So this marks a pivoting point for us. This is when we'll start talking about the sales market analysis. So far, everything that you've seen has been based on third-party data, where we checked on trends based on census, etc. But this is actually, this section, the market analysis, is the section where we start using actual real-time data that we gather ourselves. So the takeaway for homeownership, and I'll do the homeownership and Chris will pick up on rental, is that home sale pace it peaked in 2022 in the county, while prices continue to rise. I'll demonstrate that in a bar graph in a minute. The newest owner-occupied single-family homes are commanding very high prices. So no bulletin here in terms of analysis, but this is a 5-year period that we studied starting before the pandemic, starting in 2019, where you averaged just under 540 units of sales per year. In 2020, despite the unknowns of the COVID-19 pandemic, the housing market proved resilient, that you almost had 600 units of sales in 2020. 2021, when interest rates were going really low and things were going crazy with seasonal homes, people moving out of metro areas, etc. We all would live through that and live to tell the tale. Your sales went up to 750 in 22, even while the Fed interest rate was up to 8%, mortgage rate was 8%. You were still going strong at nearly 800 units. And then 23 is when the market really started to slow down, near, but not quite, 2019 pre-pandemic levels. That you were tallying 626 units of sales in 23. So it is significantly higher than 2019 still, even despite the slowdown. And the next slide will demonstrate the pricing associated with each year. As you can see, this is the median sale price for the entire county for that year. Started at 115,000, and then it started going up to 134, then to 150, then to 157. And if you remember the previous slide, 23, there was a slowdown in terms of sales. The prices have not dropped. Actually, prices still kept going because presumably for a lot of factors, but certainly one of the chief reasons is that there's just nothing to purchase. So the demand, exceeds the supply by quite a bit. So taken as a whole in the 5-year period, you had a price increase of almost 40%, 37.4, and an annualized increase of 8.3%. So that gives you a glimpse of kind of the housing affordability challenges that some families have in the county that Chris spoke about earlier. This is a quick pie chart of kind of the distribution of prices. As you can see, there are homes that are being sold for less than 100,000. That's 28%, and the other quarter or so are 100 to 150. There are homes that are being sold for 400, 500, but that's certainly not the majority. The majority of the homes, at least, it looks like it's about 80% are somewhere between 250 to below 100,000. So that gives you a distribution of the pricing that you're seeing. Next slide. One of the primary reasons we believe that the homes are getting more expensive is that simply the homes are getting bigger. The newer homes that are being built after 2010 are considerably larger than the homes that were built in previous decades. So as you can see, the oldest homes that you're looking at a 1,500 square foot of living space, that is now up to 1873. And I would venture to guess that even the newest homes are significantly bigger than 1,900 square feet. Some are going 3,000 square feet, selling for upwards of 450, 500,000. So you talk to builders and they say those are the only ways that we can really make a profit in today's market to be able to sell. But that really points to a narrower and narrower slice of your population being able to afford any kind of new production. That does compress the supply and demand complications quite a bit. So that's something to keep an eye on. In certain other communities where we work, this number is even more ridiculous, that the homes are upwards of 3,000 square feet plus. But for now, the trend is the same, that your homes are getting bigger. So something to react to later on in the strategy section as well. Next slide is the median sale price by submarket. As you can see, the blue section, the town of Batavia, it has the highest sale price of 200,000 in 2023, followed by the west market, a little bit less than that, the east submarket at 170, and the city of Batavia coming in at the lowest at 130,000. The next slide will show a trend for each of the submarkets by year. There was a huge surge of pricing in 2021 in the town. That's probably associated with one single development, we think. But nonetheless, the pricing generally has been going up quite a bit. Even the lowest, the most affordable area of the city of Batavia, it was below 100,000, below 95, in fact. And then is now just under 135. So everywhere homes are getting more expensive, and there's been a trend that's observable throughout the county.
Thank you, Isaac.
Chris.
All right, yeah, so I will jump into the rental housing market. A bit different than sales, but I think some similarities as well. So the trend of renter occupancy has actually increased, according to the census over the past decade. At the same time, it's as I think Isaac mentioned, it's very difficult to find an apartment in the county. The availability is very low to a critical point, and you'll see some of those numbers in a second. So when you look at the rental units in the county, broken up by the submarket, not surprisingly, Batavia has by far the most rental units at almost 3,500 out of 6,500. So big chunk there. The town where you see a lot more single family detached homes, and same with the east and west submarkets. So that's pretty striking that the concentration of rental units is in Batavia, but I think not a surprise. And it makes sense because transportation, it's a transportation hub, it's a commercial and medical hub, so people who live there are closer to all those amenities. We looked at your multi-family complexes, the apartment buildings, kind of traditional apartment buildings. The most number, again, not surprisingly, are in Batavia, 70% of them. But look at that occupancy rate, less than 1%. So that was at the time we did the research, available apartments over the next month. So anyone trying to find a multi-family apartment in a complex in Batavia is not going to have much luck. Now, that's not to say that there aren't individual units throughout the county, single detached homes, manufactured homes, twins, or duplexes. Those are another form of rental housing. But when you just look at the apartment complexes that will have a pool or some of those other amenities, this is the situation. The next highest concentration is in the east submarket, where that's 20%. And that vacancy rate is just over 1%. So everywhere you look where information is available, all signs are pointing to a very tight rental market in terms of multifamily complexes. Looking at rents of those complexes as well, we did kind of a low and a high. So let's start with the city. The highest rent we saw, and this is looking at a 1-bedroom across the board to kind of compare apples to apples. These are some of the newer apartments actually going into Batavia. So they're commanding some of the highest rents in the county at $13.25 a month for a 1-bedroom. So the other submarkets, the east and west, not too lower, 1,300, 1,200. The town, interestingly, did not really have anything comparable. No newer, higher end multifamily complex to compare. But when you look at the minimum rents, $5.95 to $8.10, so they're all in that $600 to $800 a month rent for a 1-bedroom, fairly consistent. And then we could not really find anything comparable in the west submarket. So the west tends to have newer, higher end multifamily available. So that just gives you a sense of the rent. So $1,300 a month for a 1-bedroom is not unheard of in Genesee County. Okay, so that was a lot of analysis and data. And again, the report has all of that detailed that you can sift through. And all that really leads to the needs of the county. That's the next critical step. So based on population trends and employment trends, what is the county going to need to provide over the next few years? We looked at 2040 as the horizon for that. And alarmingly, that's only 15 years away now, which is impossible to believe. But we think that's a decent amount of time to assess. And the key takeaway there is, although the population trends from the census over the last 10 years have shown a decline, there is the potential for it to grow. You've got some significant economic development on the horizon, if not underway already, with STAMP and some other local businesses that are growing. So together, that's going to really increase the need for additional housing in the county. And then that senior cohort we talked about, it has a lot of needs of its own, and we can get into that in a minute too. But between the seniors and the employers that are coming to the county, there's going to be a significant need. This just kind of recaps the census, or I'm sorry, the projections. So the Cornell University projects population trends that most counties throughout the state use. So this is not factoring any growth that we're about to talk about. And you see a modest decline by 2040. However, when you introduce the STAMP project, which is going to be a huge game changer, this kind of breaks down some of the jobs that are projected. So GCEDC is assuming that by 2040, there's going to be about 4,900 jobs produced by STAMP. Now, not all those folks are going to live in Genesee County, and those jobs will produce spinoff jobs as well. So you've got, supply chain folks, or you've got, the pizza shop that opens to support all the new people moving here. So there's a lot of new jobs that will be created because of that. So we're projecting that about 7,200 new jobs total will be produced because of STAMP. And those will be folks living in Genesee County. Some of those folks will siphon off to Erie County and other surrounding counties, but the projection is that 7,200 workers from STAMP and its spinoff businesses will, in fact, live in Genesee County by 2040. That's a lot of workers. So that translates to about 5,700 households that will be created by STAMP and the spinoff businesses. So kind of looking at that graph I showed you a second ago, this shows you that we go from a modest decline projection to a significant growth projection. So by 2040, again, we're adding more than 5,700 households in the county as a result of your employment. So that is a lot. Let's look at a little more detail of that here. So this chart shows you more of the breakdown of that growth from 2020 to 2040. I mentioned the STAMP impact is significant, and I mentioned the senior impact is significant. So you've got between owner and rental housing, you've got almost 1,300 units that will be needed for seniors, and you've got about 6,000 units that will be needed for STAMP employees. When you factor in some of the loss of supply, we're talking a total of more than 6,000 new units needed in Genesee County to house the growth anticipated over the next 15 to 20 years. Break it down by year, it's pretty alarming. More than 300 new units per year, or a 25% increase in your housing supply. So that's a lot. We better get started right away. That's the message. But it's very exciting to anticipate all this growth. But it's pretty imminent, and we'll talk strategies about how to get some of this going in just a second. But I think, again, the key takeaway here is significant growth expected from your economic development that's going to translate to a significant housing need. Okay, digesting all that, let's get into recommendations, strategies, and action steps. So considering all that growth and change and trends and market, and we came up with 4 key recommendations that we'll break down into strategies and actions for you. So first recommendation, with a diversifying population in terms of needs and age and different types of homes, we think increasingly, the county is going to have to offer more of a variety of housing options, from type of home to price point. There needs to be more that more residents can afford and can find that it fits their needs, more or less. Second recommendation is capturing that growth and accommodating that growth from STAMP, from other economic development, from other growth. There's going to be, as we just said, a significant need for housing in the county over the next 15 to 20 years. Back to the seniors again. They have their own housing needs. We'll get into a few strategies for that, but we think addressing that as a key recommendation is important. And then we can't forget your existing housing stock. It's an old historic county. There's a lot of beautiful homes that are well maintained. There are a lot of homes that need investment to rehabilitate them and stabilize them and keep them in the housing stock as inhabitable units that are desperately needed in the county. So we have some strategies for that as well. Okay, so let's get into a little more detail. So diversifying the housing choices. First strategy we think is basically getting support for a more diversifying housing stock. Most people are used to single family detached homes. That's what they see most on larger lots. People get nervous about apartments. They get nervous about townhouses. They think, density is not necessarily a great thing. But we think that's what the county really needs. More people are looking for that type of thing. More people are looking for less maintenance, less size, closer to amenities. A lot of seniors are looking for that kind of thing as well. So that's what we mean by a diversified housing stock. And we're suggesting several action steps for that, including a housing working group consisting of developers, landlords, municipal officials, basically kind of a regular roundtable discussion of housing needs on a regular basis, like putting our heads together and discussing what's missing, what are some of the challenges, how do we overcome those challenges, is we think a good place to start, just start talking about this, using this study as a guide as well, sharing it having people understand what some of the trends are, what some of the needs are. We think that's really important. It's very important for municipal leaders to understand this as well, since they're making a lot of the decisions at the local level. So to the degree that they understand these needs and trends and desires to inform their decision making, we think is very important also. This next is a very specific recommendation, the Pro Housing Community Program. It's a New York State program that several communities are applying for and getting approved for. And joining that provides several fiscal incentives for municipalities that can assist with housing. So we suggest, to the degree that communities can join that program, they should if possible. Philosophically, this next one is redevelopment in your older communities, the villages, the city of Batavia, where a lot of the existing infrastructure is. We think, and I think the county agrees, that that's where growth should be targeted. And they've created the priority development areas that include these types of more dense villages and suburban areas. That's really where this diversified housing stock should be encouraged versus protected wildlife or agricultural land, which I think the desire would be to remain as that is. Second strategy, reduce barriers of entry for first-time home buyers. Basically, this is helping people buy their first home. You hear a lot of people saying, well, the homes I'm looking at, the mortgage is not that different from the rent I'm paying. So it seems like I could easily afford the house. The problem is the down payment. It's scraping up that significant down payment, even if it's 3%, sometimes it's 20%, and people just can't cross that line. So they continue to rent, which is fine, but if you want to buy a home, it's very frustrating. So our suggestions here are, incentives to assist potential home buyers, which exist, from local banks and that kind of thing. There are programs for that. Also, certain employers can assist employees with down payment or providing a portion of their mortgage to keep the employee, happy, to keep them in the community, to keep them working for the company. So those are just some action ideas for reducing the barriers there. The income restricted rental housing, we think, is an important component of the market as well. You've got a large chunk, as we saw, of your population that are in the 30% or 50% of the area median income, which is low and extremely low. So those folks continue to need housing, and so we think it's important to maintain, if not create, some more new income restricted housing if possible. One tool for that is a housing trust fund. There's one, as an example, is in Tompkins County in Ithaca, where a portion of sales transactions go into a fund that help pay for lower income or income restricted housing. That's one idea. But I think just collaboration with developers that do this type of housing. One thing we see is when the expiration period of these income restricted homes come up, sometimes developers are tempted to not renew that, and then the complex goes into the market rate, or to market rate housing, not income restricted. And there are all kinds of issues with that. It's not quite monitored as well. You're taking away some of that income restricted housing from people that qualify. There's all kinds of issues with that. So we suggest keeping your supply to the degree that is possible, and then building more if possible as well. And of course, we cannot forget special service providers providing housing for special needs residents. So we've got to keep that supply of housing in check as well. And just a final note on this, where a lot of this these income restricted housing is concentrated in Batavia. I believe 10 out of the county's 23 facilities are in Batavia. Again, not unusual. Batavia is the center of commerce and transportation, but I think it's important to kind of make sure that it's a fair distribution throughout the county as well. So the resources are spread to the degree that they can be as well. And the last one regarding the diversified housing needs is we think it would be great if possible to add maybe some staff support to the county staff as well that really focuses on specifically housing, and that could be housed in the Department of Planning, for example, kind of a housing czar that deals with approvals and landlords and developers and anyone looking to expand housing or increase housing or modify housing. Just have a go-to person to kind of facilitate any of those types of needs, to not hinder that at all, as the county pursues this growth coming over the next few years. And again, this idea of collaboration, some sort of advisory board where again you're collaborating on the housing needs and from municipality to municipality and sharing challenges and stories and best practices. We think that's really important to keep the dialogue going. All right, so let's switch to the second recommendation. Again, this is dealing specifically with the growth that's on the horizon from STAMP, from other business growth. To start with, we think the county, and I think they're doing a good job at this, but making sure that the policies that are in the books that actually accommodate this growth without having to scramble too much. And what we mean by that through these key action steps is where the desire is to build some of this more higher density housing in the priority development areas to accommodate some of these employees, making sure it's allowed. Some of the villages and towns might have certain pockets of zoning that would not maybe currently allow that type of use. So it's better to, I guess we're saying, preempt that than to have a developer come and say, hey, I want to build 200 units in this area, and now I got to go before the town to change the zoning. It would be better to kind of nip that in the bud and figure out where some great areas would be for this type of development in the priority development areas, and do that ahead of time is the idea there. Along those lines, making sure the comprehensive plans follow in line with the zoning so that the visions and goals of the towns and villages incorporate this growth, and they're aware of it, and it complies with the plan and the zoning as well. Some tools for facilitating growth are inclusionary incentives for developers, where you offer them some concessions, whether it's tax or density, that kind of thing. Just exploring that at this stage before things get too crazy to decide, is this something we want to do? Are there other things we should be looking at to incentivize developers that we have more of an appetite for example? And then of course, making sure the infrastructure can absorb this growth. Infrastructure currently is in very strategic parts of the county. And the recommendation would be to build off that and not send utilities out into far-flung areas that don't make a lot of sense, that could disrupt some of the the agricultural and the protected land, if you will. So again, just kind of matching up infrastructure with the housing needs. Again, I think the county is doing a good job of this, but to the degree that any more streamlining can occur, we think would be valuable. And I think a lot of that goes with coordinating with the municipalities, just being a good partner, assisting them with anything that can help the growth occur, whether it's going for grants that can assist developers, any sort of financial assistance, technical assistance, back to the whole zoning thing. Just making sure that everyone's ducks are in a row as this growth starts to approach, making sure from a municipal standpoint, everybody's ready, more or less. And then simply increasing the supply. What else could you say, right? We need to build more houses. So again, it's making sure that developers build more homes for the workforce that's coming in, and that could be a variety of homes. You're probably going to have some executive levels of employees moving in that may want a larger, higher end home, but you're probably going to have, for the most part, a pretty middle class workforce that is going to afford a certain type of home that is not there right now. It's going to have to be built for these folks that will be coming in the next 15, 20 years. And, a lot of developers will say that's really difficult. Um, you know, Small homes are difficult to pencil out, but there are ways to do that, whether it's more dense or, again, it's, uh, you know, sharing common areas. There are ways that developers can make it easier to handle a smaller home type of development than just the larger ones. But to the degree that incentives can be provided for that, we think is really recommended. And back to the mixed use, dense type of thing. A lot of folks are very much open to townhomes or a condo, lower maintenance, an apartment. So to the degree that the county can encourage that type of growth to accommodate the anticipated employment growth is advised as well. So it's not going to be just single detached homes. It's going to be a whole variety of housing, because I think you'll find that people wanting to come to the county to accept this employment are going to have a whole variety of different housing desires and needs. So, okay, moving on to the seniors. One idea is to keep them in their homes. If a lot of people want to stay where they live, where they're living, as long as possible, understandably. If it's laid out in a way that could occur, that's great. We find that in a lot of cases, and the survey we sent out demonstrated this, that a lot of folks who say they want to stay in their home admit that their home is not exactly equipped for that. So that's going to require some modifications, some mobility types of things, safety measures to allow seniors to get around their home more safely. So that's something that some places have those kind of programs, but they often need support, financial support to implement. You guys have a great program, the handyman program. We tout this in a lot of places we work. People think it's an amazing program. Continue it for sure, so people can have assistance they need at a low cost to install some of these things, to have their porch painted or their screen door fixed. They sound simple, but they add up, and to the degree that these things can be fixed and help seniors stay in their home, the better, and the better off everybody will be. And then, of course, the other side of the coin is building more housing to accommodate seniors as well. Again, that's going to be probably lower maintenance, single story, amenity rich areas where if they're going to move, they might as well be able to get to the hospital more quickly or get to the grocery store more quickly. So probably located closer to those amenities. Some of the ideas for that, if you've heard of accessory dwelling units, that's kind of a popular national trend, which is, it can be simply what used to be a garage, a detached garage that's added onto or converted into a small apartment where a relative or a mom or dad can live. So that's an idea for accommodating seniors. There's always a demand for more continuing care, residential communities, and that can be anywhere from independent to assisted living. Coordinating with those developers and saying, wow, Genesee County has a growing senior population. We've got a pretty significant market here, folks. You could come in here and build one of these places and it would get filled quickly. So I think it's some of that is outreach with these folks, and then remembering that some seniors are lower income too, and not everybody can afford a fairly expensive patio type home. Some require income assistance living as well. So just being sure that those that element of the population is accommodated as well. Okay, and finally, recommendation 4. This is dealing with the older aging housing stock. I think simply minimizing any impacts of that is a place to start. With the understanding that it can be improved over time, but there are some short-term steps that can be taken. We've seen some communities maintain an inventory of vacant homes or distressed homes, and that really keeps landlords in check. They know that the municipalities or the county has them on this list, and they're keeping an eye on their property. So that can actually go a long way in maintaining some of these more dilapidated structures. A vacant property registration program, even more. Getting them to sign up for this and renew it every year, and having them pay for it. A land bank is another way where you can build up a fund to convert or purchase vacant and dilapidated houses and sell them to folks who are able to update them and rehabilitate them and either rent them out or sell them. So that's a suggestion. And then there are also ways to make sure that if someone decides to repair their unit, make sure that they're able to be compensated for that effort, so they're not losing too much in rent when that's taking place. I think I already said that for number C there. So, but the next strategy is supporting home renovation activities. So the next step is, getting a hold of these homes, or if you own them, having ways to make sure you are able to provide the upgrades that are needed. There are, ideas are launch a home improvement program in some of the villages or the city of Batavia, and that would be, financial incentives to allow people to do that kind of thing. If a home is too far gone, I hate to say that, but in some cases it's probably better just to demolish it and replace it with a new home. And there are incentives out there as well. The state has those. So, promoting these things, these programs to people to help them take action with their older home if it needs significant improvement. And I already said this one here, incentives to replace any lost rent to landlords that do want to do a large capital improvement to their complex, but they're hesitant because it might require evacuating the place for a few months while they fix it up, and then they'll lose rent and that kind of thing. So there are incentives to offset some of those losses. And that's it, folks, with the recommendations. So that's the end of our presentation. I'd like to open it up. That was a lot of information. That was exactly an hour. It's amazing. We can go back and look at certain slides. We can answer any details you have. And then at the end, before we leave, we'll show a quick preview of what we're calling a story map, which is really it's an online executive summary of the study with pictures and graphs. And once that's released, you will be able to go on the county's website and get that link and view that from your phone or your tablet. So we'll get to that at the end. But are there any questions that come up right now? And if you have any later, feel free to contact Felipe or Jimmy, and they'll relay those to us by all means. So.
Chris, we do have a question in the chat.
Oh, yeah, there we go. Yep.
I believe Paul Marchese asked, if I understand this, we need 180 to 250,000 housing stock built, as well as more upscale type apartment housing, correct?
Yeah, I would say so. We're saying you'll need a mix of owner occupied for sale housing, you'll need a mix of apartments, and likely this growth will be a variety of income points. So I think people are going to be looking for all of those types of things. So I would say yes, the growth in 6,000 housing units will need to be a combination of those types of things.
I just wanted to
Um,
jump in there too, just to make sure everyone's oriented with how to ask questions. At the bottom of your screen, there's probably an icon. It's kind of like a heart shape icon that says react. And if you click that, there's an area you can click that says raise hand. And that way we will know your interest in wanting to speak. And then you can proceed to unmute yourself, or we'll ask you to unmute after that time.
Thanks, Jimmy. I appreciate that.
Looking up, yeah. I see the comment. I'm in Monroe County, first time buyer grant. That's great. Thank you. And then yes, the home buyer dream program. I didn't mention that by name, but that we do mention that specifically in the recommendation. So thanks for that. But that is a great program that we're seeing more and more in New York State as being a successful resource. Next, rural development can do grants and low interest loans for very low income seniors to the red. Okay, okay, excellent. Oh, okay. So someone asked, are there specific contractors that are recommended? So we don't have that. I don't know if the county planning department has dealt with any specific folks that you know, could be relayed to the community, but that is more local than we're able to provide.
Yeah, that I can, on a personal basis, I can attest to finding
Yeah, I know.
having the same issues. Just that's something that we've been experiencing quite a bit.
Yeah. Okay, follow-up question from Michael. According to the numbers, the income levels already suggest the renter or potential home buyers already strapped. How do you suggest they afford 180,000 plus housing? Well, I guess to us, 180,000 is actually fairly attainable. I don't know if affordable is how you'd say that, but you know, you're seeing a lot of new homes in the $350,000 to $400,000 range. That is completely beyond most people's affordability. But I think we'd have to look at the percentage, but I think a good number of residents would be able to afford $180,000, perhaps minus the down payment, which is always the challenge. I forget what 180,000 translates to in a monthly mortgage, but
Yeah, so I think the question is it a housing price problem or a household income problem that people are struggling with housing costs? And I think just relatively speaking, I think Chris and I, we've observed that just if you just look at it without any context, that homes seem to be affordable in Genesee County. Yet, if you look at it in the context of the median household income or household incomes, that people are still struggling with housing costs, right? So I think we have a challenging kind of a balance that we need to strike here to continue to stimulate the market so that more market rate development occurs, that the demand that's originated by stamp and other manufacturing and other business economic development, they need housing, they need market rate housing, workforce housing, certainly above $180,000 range probably. But because developers look at the current prices of the current incomes, etc., they seem to be a little, my word that I've been using a lot, a little skittish. They're nervous about taking the risk in this climate right now. So what could we jointly do together to kind of hedge some risk? I think that's an important thing for builders to go ahead and start, digging the ground with full confidence that there will be demand. So is it a case where if you build it, people will come and buy them or rent them? Probably, but if I were the builder, I'd be a little nervous about that too. It's a huge risk, and zoning and possible community opposition to your specific development. Those are all things that are part and parcel of trying to be a builder these days. So yeah, these are the things that we want to be mindful of. So I think it's a dual mandate to continue to provide for affordable housing for those that are continuing to struggle, yet at the same time trying to stimulate the market so that more of the workforce could be accommodated. I think that's kind of what we've been saying a lot in in many areas, and certainly Genesee County seems to fit in that as well.
All right, Chris, looks like Joanne elaborated on a question a little bit, clarified a little bit. I don't know if you can answer that.
Oh, I've been trying to. Oh, I see. My question is not so much for a recommendation, but have you considered this shortage of contractors? I see. That seems to be an ongoing issue. Okay. Oh, yeah. Yeah. So it's a workforce issue. Yeah. I don't have an answer for that. Yeah, it's. I don't know if we need more technical training or encourage you know, for folks that are on the fence about college or trade school, say, hey, there are great jobs out there, high-paying trade jobs. If you want to do that, instead of going to college and not knowing what you want to do, go to trade school. And yeah, I think there needs to be some more encouragement to get more of that workforce that we just don't have. I completely agree with you. Yeah, so
we do have a program at the economic development guys have been working with, and Chris Swazi in particular. He was here earlier at the meeting. I would be sure that he would have popped up and said and said that they have a program called Glow with Your Hands that trying to encourage students to into trade schools and those kinds of things. So it's something that we are working on.
Good.
As a county.
Yeah, and I feel like it is a growing trend. I think for a while, for some reason, there was very little interest in that, but I feel like you're seeing more of that, which is great, because there's clearly a need for it, and you'll always have a job. So it seems like a win-win to me. So hopefully that'll continue.
We do have another question from Paul. He asked whether the Genesee County Smart Growth Plan is going to change to accommodate this. I guess I can take part of that question is that it's definitely a policy question that that is directed more to our legislature, but I really do believe that there is enough land base out there within the priority development areas to accommodate the growth we need. Definitely for the foreseeable future. It's just directing that growth to those areas with existing infrastructure.
Yeah, good. If you take a look at the map the county produced, yeah, it seems like there's a lot of opportunity for development in very strategic, I think, well chosen areas. So my guess would be that from what we've seen, there would be enough as well. So
another question from Joanne. If you would like to take that. She says, it seems as though you are recommending rental housing for low-income tenants as a need in this area. Is that correct? If so, would an apartment complex catering to very low income tenants be a recommended project for Batavia?
Yeah, I think we're recommending rental housing for all income levels, to be honest. Um, from the upper level down to the you know, the low and extremely low income. I Batavia is an ideal location again because of the services and the amenities. You know, if you're low income or extremely low income, you're more likely to not have a car, or you may have health challenges that you're unable to afford to take care of. So, um, you know, I know there's often criticism of concentrating low income housing in certain areas, but it often happens for a reason too, because of just the availability to amenities. So I think yes would be an answer, but I think also, um, you know, one of the points we made about a fair distribution of low income housing to ensure that people, you know, in Leroy or other more concentrated parts of the county have that opportunity as well, and they don't have to move to Batavia, for example, if they want to stay in Leroy and they need a low income apartment. So um, I don't know if that directly answers your question, but I think yes, Batavia could afford some more, and I think some of the other concentrations of population in the county would be a good location for additional low income housing as well. You know, smaller scale. Some of the more recent stuff that's been built are 20, 40 units. Um, you know, I think that the days of the really large tax credit projects, you just don't see those as much. It's much smaller. So I think those kinds of smaller projects that could integrate pretty nicely into existing communities would be the type we would recommend.
And I think maybe we might have missed, Jimmy, you said we might have missed a question. Can you find that?
You know, kind of
I think it was Michael D. I don't know if we got to that one yet. You said according to the numbers, the income levels already suggest the renter or potential home buyer is already strapped. How do you suggest they afford $180,000 plus housing costs?
Yeah, yeah, we talked about that a few minutes ago, just saying that you know, a lot of it may be the down payment, but our sense is that is a fairly affordable mortgage for a good chunk of the county, but not everybody. You know, not everyone's going to be able to afford that. And then there were some reactions to that, that there are programs, USDA 502 direct loans, um, some other things that would help with that to afford that.
Okay, we have another question by Marianne. She asked, you also recommend workforce housing for Batavia as well?
Yes, for sure. And when we talk about workforce, I think we're talking, you know, again, that 180,000 or the modest apartment that doesn't have necessarily all the bells and whistles like the EV charging station or the dog washing, but just a nice new middle of the road apartment where folks can um, get around easily, can possibly walk places, get to transportation. So I think Batavia is a great location for that type of thing. Yes. Oh, there's another question on RTS. Expanded their transportation throughout the county. Therefore, housing other towns could be supported. Yeah, I think the point there was, yeah, to the degree that people can get around, um, assist, you know, it helps housing for sure. I think I'm interpreting that correctly. So, yeah, and we've heard from some of our stakeholder interviews that, you know, I think people don't often think of transportation as a challenge, but it is. You know, people either don't have a car or you know, they're a multi-working household with one car, and that makes it difficult. You know, you've got to drop somebody off, and so to the degree that you know, housing can be built around transit lines, bus lines, or the degree that the bus service can be expanded is absolutely a yes from us. to, you know, promote that improved relationship between housing and transportation. Okay. This definition, workforce housing, is it identified as income limited? It is generally not identified. Workforce housing tends to be the 80 to 120% area median income. So folks that are working, but they don't have, they have a pretty modest income that they can still try to afford to purchase a home. The income limited is going to be more of the definitely below 80, often below 60% AMI, if not lower. So definitely two different categories that we're talking about. The workforce housing tends to be the one that a lot of communities are focusing on because they just don't have enough of it. They'll often have a lot of income restricted and very affordable housing that's provided by HUD and tax credits, or they'll have very expensive homes, because developers can finance that more easily. What they often are missing are these missing middle. I don't know if you've ever heard that expression, but that's a smaller type of more like a townhouse type of thing that's more affordable to a lot of people, more attainable to a lot of people, I should say. So we don't confuse the affordable definition. But yeah, so they're definitely two different income levels, two different price points in the housing market. Another comment, transportation is a huge barrier in Genesee County. Yep, heard that multiple times.
Okay, well, someone raised their hand, Julie.
Yeah, but I just got a couple of questions. We're talking about a lot of housing and building higher income housing, and I agree with that, higher end housing and everything. But what do we do now about the current housing crisis that we have right now? We have families living in hotel rooms. We have families or individuals living in deplorable conditions because we have landlords that are not keeping up on their houses. They refuse to keep up on their houses. So what do you do about that? And also, what do you do about if the stamp project is not going to produce the jobs that you think that they're going to produce, especially when one of the stamp businesses that are going in is already in a financial crisis right now. So what are you going to do to compensate for that in case some of the things don't pull through like you think they're going to do by bringing in 7,000 people? Not everybody's going to want to stay here in Genesee County. They might want to still live in Erie County or go to Orleans County or stay in Monroe County. So how do you compensate for all of that?
Yeah, well, the numbers, the projections, that 6,100 housing units, that does account for that. So we factored in a calculation based on the typical work and living destination between Erie County and some of the surrounding counties. So that has all been factored in. Those are projected people who would live in Genesee County. So that has been accounted for. Your question about what do we do if stamp doesn't live up to its potential? Yeah, well, there has not been a lot done yet to accommodate that growth yet. So I think the problem would be if a lot was built and then nothing happened from a housing standpoint. But the expectation is that incrementally housing will be built over the next, let's put this slide back up. So here you can see, can everybody see that? We have, in 5-year increments, the demand. So down here, the new supply needed for the next 1 year, 597 units. And then you can see over the next 5 years from that, another 1,900 and then another 1,800. So we've broken it down into suggested chunks based on the projected growth from that. So it's not like someone's going to come in and build all 6,000 units in 5 years and then 5,500 of them may go vacant if something doesn't happen at stamp. So I think on the flip side, that's part of the risk. I think is developers may say, well, what if stamp doesn't live up to its potential? Am I going to be the one stepping in and breaking ground on 300 units? So I think that's kind of the challenge right now. But I see that being more of a challenge than potentially overbuilding and having stamp under perform, if that makes sense. So I don't think you're in much of that predicament as you might be not having enough, if that makes sense. And remind me of your first question again. I kind of skipped over the first question.
And no, that's okay. In regards to our current housing crisis that we have right now, we have families. I work in the healthcare industry, and I do a lot of the transportations. I do a lot of housing referrals. Our agency actually opened the warming center in Orleans County, and we're opening one in Wyoming County as well, to help those who are on the streets, who are unhomed. And we're not talking about people who are living in tents and so forth, because unhomed has a different connotation than just people living in tents.
Right.
So we actually have family members, patients of ours that live in hotels, one room hotel rooms with no accommodations, nothing to help them eat healthy, things of that nature. So how do you, work that into building houses, building affordable apartments for our families or for our residents to stay in and grow here in Genesee County? Because we would like to have them stay here. They want to live here, raise their families. And then you also have those families that will not move out of their deplorable housing conditions because the landlords won't fix what they need to fix, no matter what incentives you give them or anything like that, they're not fixing their housing. And so these people are not going to complain. These people are not going to say anything. They're going to stay there because they know it's better to stay in these deplorable conditions than go live in a one-room hotel room with 3 of their children. So how do you account that and put that into your numbers? Because we're talking about high-end housing. We're talking about the senior housing, which we need as well, because, they can't afford, these high-end housing. So how do you work that into these numbers here?
Yeah, well, I think the notion of encouraging more income restricted housing that we'd mentioned, it's the tax credits are increasingly competitive, so that it's a challenge for low income housing developers to build the type of housing that's needed. So we're seeing this problem in a lot of places. We worked in Ontario County, and a lot of folks in their communities were living in motels as well. I think that type of housing is kind of straddles the private housing market and the social service provider, not market, but organization, I guess. It's there's often a lot of, I think, intervention that needs to occur in the private market for that to occur.
Yeah, I can jump in as well,
thanks.
Chris. So I think what we're saying is, even in the projections, I think we're not saying that the county or government entities or any one particular group are committing to building X or Y. We're merely, as consultants, projecting what the demand would be if things happen in a certain way. So it gives you a kind of a target in terms of what kind of volume that you can expect. That's number one. And number two, some of the housing challenges are, we think that it's a big problem is that the supply is not keeping up with the demand. That's why everybody's experiencing these hardships and affordability issues and scarcity of housing, because there's just not enough homes. So one of the one of the ways to kind of alleviate that pressure is to build more homes, because people who would buy higher end homes are buying lower priced homes, and the people who can afford the lower priced homes are just being outbid by people who are higher income that would otherwise be able to afford a more higher income home. That's part of the dynamic that's going on all over the country. You're not alone in that. We keep saying that. And three, the fact of the matter is, the incomes are not keeping pace with the cost of housing overall. So the folks that are the most vulnerable, their incomes are nowhere near the market rate to be able to afford a high.
Isaac just froze on my screen.
Yeah, but no, I understand. I understand exactly what he's saying. Especially with the outbidding, a lot of people are buying the houses. Saw that happen to my daughter. She was finally able to buy a house, but that happened, and I get that totally. I was just wondering how we can just, I guess, get these a little bit better than what it is now.
Yeah, no, I hear you. It's kind of a chronic problem. It's really difficult to resolve, I guess. Yeah. Let's see. Any other questions?
I don't know if Isaac is going to
I don't know
jump
if he's
back in,
yeah, maybe
but
he just froze there.
we are at just about the hour and a half mark,
Oh,
which
oh, okay.
was our target for today. We can continue to answer questions. Feel free to email us. And this like I did mention, this presentation will be available as a recording that you can share with anyone who might be interested as well. But feel free to reach out to us via email, and if you have any further questions, and keep an eye on the website where we will be posting the PowerPoint presentation here, the video recording, as well as the final documents for you to review. And again, we're available here for any other questions in the future. All right. And thank you very much to Chris and Isaac, and thank you to everyone who came. Yeah, stay tuned then.
Sounds good.
All right. Thanks, everyone.
Thank you, everybody.
Take care.
Okay, thanks. Bye-bye.